Yo, yo, yo. CPA Strength here, back again with another awesome video. Accounting for Beginners number 141. This is included in the best playlist, best accounting playlist, screw it, best playlist in the world. Let's go. Check it out right here, but for real, this will really help you out on your journey for accounting for beginners, learning the basics. Please, like the video. You know what I'm saying? Take your shoes off by the door, like the video, please. Also, please leave a comment. Please leave a comment for the algorithm. Please leave a comment. Like the video, leave a comment. That's all you gotta do. Then learn for the free 99. You like that? Yes. I know how it is. I make my money somewhere else. I do this to help people. Okay? I do this to build people's confidence up and help people get to where they're going. You can do this. I get messages for comments from all kinds of people. Thanks for leaving a comment. You know, why they watch the videos, how it's helped them. School. This is accounting for beginners, but the great thing is you can learn this information in the accounting for beginners and you can extrapolate it. You can keep it going forever and ever and ever. I get messages. This helped me pass my accounting for beginners class. I aced it. This helped me. I just got a job as an accountant. I set out my resume. I know what I was doing. I don't know anything, so I'm watching these videos. I use DC Adler at my job. I use these videos to help me pass my CPA exam. I'm a CPA now and I use DC Adler. You can, I have a small business and I'm learning accounting using DC Adler. So you can just always use this fundamentals. This fundamentals, DC Adler is what I teach is double entry accounting system. Debits on the left, credits on the right. And it's been the same exact system the whole world over for 500 years. So if you just sit down and take some time. I need the homework. We talking homework? We talking homework? Homework? Just don't worry about your homework right now. This is like real life, you know. Anyways, DC Adler, let's go. Debits, credits, assets, draw, distribution, dividends, expense, liability, equity, revenue. On the first 140. So now I wanted to leave it blank like this. Just remember DC Adler. Yes, 8 letters. Don't go ape on me. I'm talking about. Oh, they told me to memorize 8 letters and I got. Oh man. Listen, if you can't live, just whatever. So I'll show you what I do. I've been doing this for a little bit. Went to college at 31, so I've been doing this for 14 years, but not the DC Adler. This is probably in 23rd, probably 10 or 11 years I've been doing the DC Adler. So I want to show you what I do. You know, I still use DC Adler, but I don't. When I'm thinking stuff, when I'm making journal entries, when I'm working, when I'm doing accounting stuff, I'll just put a line in the middle. I'll just put a line and then I'll make a, you know, what's over here, a debit entry, and I'll make a credit entry. But I'll just make this line is how I'll do it these days. You're just starting off. So I want you, if you're studying, if you're working, if you're doing whatever, until this is ingrained in your head. So maybe if you do this for 2 months. If you do this every morning for 2 months, then you won't have to do it for the rest of your life again, and it's the same for 500 years. Debit on the left, credit on the right. Now debit's always going to equal, debits on the left, credits on the right. This is kind of what I went over in 140, debits on the left, credits on the right. Debits equal credits, and neither are good nor bad, they just are. Basically, I put that on because everything's either going to be a debit or a credit. That's, I guess, the most, it's always going to be a debit or a credit. Everything, you're going to have a debit and a credit. Every entry, every transaction you have. Now, I'm not going to go into LER. This is going to be the next video. Assets, distribution, and expenses. So we're going to talk about assets. Assets being, cash is the big asset. Cash is the big asset. Another you know, big asset which you would depreciate or whatever would be a fixed asset. But fixed, like, what do you mean fixed? Let's just say a vehicle. Let's just say a vehicle is an asset. Let's also say an account receivable is an asset. We're also gonna have another. We're gonna also have another asset. We're gonna say loan. If you loan somebody, loan to somebody, a loan to somebody, loan to someone. Now all those are assets. All right, all those are assets. That would be the A here. Assets A, right there. Let's go to the D. I'm gonna switch it from the draw. I know you've been watching these before, but we move on and upward and stuff. So we're gonna say D is a distribution, which could be a shareholder distribution. That's what I use the most, shareholder distribution. Shareholder distribution. Shareholder distribution. Could be a dividend. Could be a draw. This was shareholder distribution. A distribution, that would be for a S Corp. A dividend would be for a C Corp. A draw would be for like a sole proprietorship that in the real world it doesn't really happen. Also for aid, for our positive side debit, I'll get to that in a second. I just want to get to what our aid is. So ADE, AD, DC aid, and then E is expense. Alright, that looks like trash. E for expense. Different expense. Expense is something that happens in your business, necessary and ordinary cash outlay. We're gonna say internet. Different type of expenses. Internet, rent. What's another good expense? We'll just say supplies. Now I have other videos, or if you have questions, ask a question. If you don't understand what something is, that'll make a great, you know, another video. We've got your DC Adler. So you write down your debits, credits, then you got your assets, distribution, expense. These are in the, so it's always going to be in the debit over here. Now if these are going up, if either of those are going up, if any of these are going up, it's going to be a debit. Now here is kind of a trick of something which I've gotten questions on, which I probably didn't explain that good before. If they're going down, if an asset's going up in value, you're getting more cash, you're going to debit that. Distribution, if you're getting more of a distribution, if the distribution's going up in value, you're going to debit that. If the expense category is getting higher, you're going to debit that. If a asset is decreasing, if an asset is decreasing, it's going to be credited. So if an asset's going up, you debit it. If an asset's going down, you credit it. This is basically a T account, but so simple, because all you have to remember is DC Adler. So it's like a T account really simplified. If a distribution is going down, you're going to credit it. If an expense is going down, you're going to credit it. You know, and when I first started doing these videos, I was fresh off of passing the CPA exam. I was fresh off of going to school for 5 years, and that was fresh in my head. So these were really tailored more for school, which these are still great for school and will get you past school, although it's tailored more for owning your own business. tailored for working at an accounting firm, you know, for doing your own books. Less tailored for school. So let's just go over this real fast here. DC AID-LR. Debit, credit. We're gonna go over LR next. But the AID is for AID is for assets. AID is what the heck, man? Come on, bro. Good enough. AID is for assets. D is for distribution. E is for expenses. You would write it down, assets, distribution, expense. You'd write this down on the debit side, because you want it when it's going up. So that's how you would write it. Debits, credits, assets, distribution, expense. Then you'd have LR over here, but this would be when it's going up. We're not worried about that right now. You just got to keep on following along. Don't worry about the homework problem as of right now. But so if assets are going up, you're going to debit it. If assets are going down, you're going to credit it. If your distributions are going up, you're going to debit it. If your distributions are going down, you're going to credit it. If your expenses are going up, you're going to debit it. If your expenses are going down, you're going to credit it. Let's think about this a little bit more here. We'll start with, I think, expenses, because 99% of the time, if it's an expense, it's going to be increasing in value and it's going to be a debit. So that 99% of the time, the debit's going to be an expense. The expense is going to be a debit. Let's say you just started your business out and you have an internet bill of $300. So your expense went up, increased by $300. So it would be a debit over here. If you get a refund back or a reimbursement of expenses, that means, you know, so you had, let's say you got $100 reimbursement. So you spent $300 on internet, but then they gave you $100 back. So that means your expense went down. This is rare. Then you would credit your expense. That's rare. So 99% of the time, your expense is going to be debited because it's going up in value. Distribution, shareholder distribution, dividend draw. That's say you've got money. Let's just go with distribution, because this is what I use. You've got profits in your business and you pay yourself. Like I'll write a check out of Dorn CPA, or really what will I do? A Zelle. I'll Zelle myself. Dorn CPA. I'll Zelle Jonathan Dorn $5,000, and that's a shareholder distribution. It goes up. So your shareholder distribution is, I'd say not 99, but you know, 70-80% of the time, shareholder distribution is going to be debited because it's going up in value. Now, if you, same as for dividend, you issue dividends. An expense is its own category in chart of accounts. Assets its own category in chart of accounts. Now, a distribution is, it reduces your equity. You'll see how all that gets, everything kind of plays in together, and sometimes I talk out of order, but it's just going to be lots of practice and you'll get everything. So shareholder distribution, if 99 times, you know, if so you write yourself a check or you Zelle yourself from the business. Your business writes the person who owns, the shareholder, a $5,000 check or a Zelle transfer, then that's going to be a debit over here. Now sometimes you take your own money and put it in the business. That's in one of the rare kind of cases It's not as rare as a reimbursement of expenses, but that would be credited. That would be what I call like a reverse shareholder distribution. Now we got assets. So let's just stick with, you know, they could be, there's many different assets. I say the most common one is cash. Now this is, I've said this before, I have videos on cash. If you can just do, you know, follow the cash, you're gonna be fine, because that's gonna be, you know, 99 out of 100 transactions have cash involved. For the length of the, for the sanity of the length of the video, let's go with assets. Adler. If assets are going up in value, it's going to be debited. If the assets are going down in value, it's going to be a credit. Now assets go up in value all the time. So you're going to have a lot of assets, you're going to have a lot of cash on the debit, you're going to have a lot of cash on the credit. You know, you're going to have accounts receivable debited if it's going up, credited if it's going down. Same when you loan to somebody, you're gonna, you know, so the assets, so mostly, so for the aid, where you have your distribution and expense, they're mostly, especially expense, are going to be debited because they're going up in value. Assets are going to go both ways. They're going to be debited and credited. What else do I want to say? I wish maybe I should go live sometime so I can be like, what else don't you understand, or this or that. I'm really trying to give value. I've been in this game for, I guess, I went to community college like 14 years ago. And I've had my own business for 7 years, so I'm trying to give value. I'm trying to think about questions that I've got through the years to help. You know, I make my money through my business. I do this to try to give back, to try to do something with myself, you know, try to motivate, inspire, teach, give back to the world. DC Adler, debits, credits, assets, draw, distribution, expense. Now, you can see if they're going up in value, they're gonna be debits, assets, distribution, expense. If they're going down in value, they're gonna be credited, assets, distribution, expense. Now, if you've made it this far and you're wondering, DC Adler, I'm just gonna throw it all in here. So you just gonna know, you just have to know if it goes down, you're gonna credit it. But I'll do the LUR. Liability, equity, and revenue. And these would be up as well. Increasing in value. These would be increasing in value. And then, see, you just, DC Adler is to get the mapping. So you do, you know, you write DC and then Adler, and then you write debits, credits, assets, distribution, expense, liability, equity, revenue. So I gotta remember is these, and then what they're for. And then these are labeled in upward increasing positions. And if they're decreasing, you kind of mirror it over. Anyways, I hope that helps somebody. I read all the comments, I answer all the comments. If you have a question about this, please leave a comment asking your question. What I think is great about this is no question is dumb or not. If you don't understand it, you don't understand it. And trust me, probably 100 other people have the same question. You know, if I'm missing something or you have a question, leave a question. I'll do my best to answer, make another video out of it, give me a video idea, I can help. That's what I'm trying to do. Always do your best. Love yourself. You've got to love yourself. I just started loving myself 6 months ago. It took me 44 years to love myself. 44 and a half years. And You know, if you don't love yourself, you have nowhere to run to. And guess what? This is all you get. You get one life. So love yourself, enjoy it, do your best, try to be nice, uplift. I can't stand people who are always negative, always talking bad about other people. Oh, because guess what? You think they're sitting there talking bad about other people to you? What do they think? What do you think they say to you when you're not around? They talking bad about you too. Anyways, till the next one, CPA Strength, I'm out. Deuces.